Hey there, it is Mike Wise with your weekly mortgage update. And it's been a pretty quiet week as far as economic data has been concerned. But we had a few things going on at the office this week. This morning, I was out videoing at the Ronald Reagan Presidential Library. So excited to be there. That was for my American Dream TV show that we have airing. That episode will air probably in about 30 to 45 days. But that was fun doing that. And then yesterday we had about 40 agents over the office going over the NAR settlement and how that's going to impact the realtors, what they're going to be saying, what they're going to be doing. So that was a fun time seeing everybody here at the office. But let's get into kind of what happened in the market this week as far as the economy is concerned. So housing starts and permits. Let's start with housing starts. They fell 5.5% in May. A big drop, down 19.3% for the year. And multifamily starts, they were even down even further. 295,000 units started. It's the lowest level since 2017, excluding COVID. But let's go into the permits. The permits fell 3.8% in May and down 9.5% year over year. So why am I telling you this? So a couple of things that I want you to understand is that basically this is a sign that the builders are nervous about the economy. So as things are getting worse for the economy, better for mortgage rates, the builders are getting more and more worried about building a lot more houses in the meantime because they don't want to build houses when people can't afford them. And so it's a little bit of a concern in that regard. Why am I telling you this? I am telling you this because the housing starts and permits, the less units that are built, that means there's not enough inventory out there. If there's not enough inventory out there, there's more demand, there's less inventory. It's a supply and demand issue. That's going to keep housing prices up higher. And so I don't see any weakening in the housing market in the near future. And this is just a longer term impact as far as especially the permits are concerned. So when they're issuing less permits, builders are nervous about that. But what happened this week was a couple of different things. I'll start with the leading economic indicators at the bottom of the screen. Those decreased in May by 0.5%. And then they've been negative for the last 25 out of the 27 months. So a lot of negative has been going into this. They still don't forecast a recession, but they do see things slowing, right? So that's the economic indicator. So again, that's bond-friendly information. The CBO, they came out this week along with all the rest of the kind of bond-friendly data that was out there. There was lower inflation. There's weaker jobs data, unemployment rate going up to 4%. But the CBO, they came out this week and they reported spending. The U.S. spending problem, it continues to accelerate. So they came out with an additional deficit that would be over 1.6 trillion. That's spending more money than we're making, right? So there's not enough taxes to be able to pay for our budget, right? They increased the estimates by $400 billion. We're talking about big numbers here. These are some really expensive numbers, and this is going to take over our budget, the amount of spending that we're doing here. And how do we pay for that? So this is the interesting part to me, which kind of goes deeper into the bond market. And when we talk about this deficit, that money has to come from somewhere, right? Well, we can either print it, which we do like doing in the United States, but you can either print it or you can issue bonds. So when you issue bonds, right, that means you have people that invest in those bonds. They pay back, so they invest in those bonds. The money goes to the government. It helps basically cover the budget, right? But then what happens is that money is owed back to you as the consumer. So the big point here, though, is that it means that more bonds are going to be issued. When more bonds are issued, that floods the market with more product, more supply, exact opposite of the housing issue, right? So if you actually issue more and more and more bonds, right, there's more supply out there. What happens to prices when there's more supply? It starts to come down. And so what that does is that increases interest rates there. So we have a little bit of a yin and yang going back and forth with the interest rates there on this. But the CBO, that was not bond-friendly data that came out this week as far as the kind of increased estimates of the budget there. So what was the impact on the treasuries? Well, like I said here in this arrow, it was pretty flat. We're in a range-bound trading here. So we're looking at 100-day moving average, 50-day moving average, 25-day moving averages. There's a lot of support levels, that they call it S1, support level 1 is all down here. This is a floor, and up here is the resistant lines. This is kind of where prices, the treasuries go up to. You can see it's been a very, very flat last 5 to 7 days here. But the yield, it went up just slightly to 4.23 from, I think, 4.2% last week. But again, overall, very, very flat on the yields here. We do have this support level at the 420 that is kind of a weak support level. So the real resistance level up here is your 100-day moving average, your 200-day moving average. That's a pretty strong support or resistance level down there. So we may see, if there's any more bad news in the economy, the employment number goes up or jobs go sideways here, we may see the yield go through there. But we're range-bound trading at this point in time. So 30-year fixed, hovering right around 7%. Last week was 6.99%. Rates are flat. Not much of a change as far as interest rates are concerned. Before I left here for the day, I wanted to talk to you about the new doctor program. So no mortgage insurance, as little as 5% down, up to $2 million loans. So this is our new doctor program that's going to be out there. Take a look at it. I will be coming out with more information on this product in the near future. So this is Mike Wise with your weekly mortgage update. I will be around all weekend, so please feel free to give me a call, shoot me a text or an email. Would love to talk to you about any of your issues or get anybody pre-approved. So hope you have a good weekend, and we'll talk later. Have a good week. See you next time.